What is going on? Ada Nation, welcome to Dapp Central. I'm your host here, Fareed. Today, we're going to be chatting about MELD and getting some of the latest updates from the team, given a recent X or Twitter space that took place with Ken Oling and Pepe, their CTO. Now, as a part of today's video, we're going to be jumping into updates surrounding their Neobank, potential partnerships, as well as their staking mechanism, which will be native to their L1 or the MELD blockchain, running as a subnet on the Avalanche network. Following that, I want to quickly touch on the bank managers as well as some general protocol updates. As always, if you guys do appreciate updates like these, I would appreciate you if you could tap that like button. If it's your first time stopping by Dapp Central and you want more content like this, consider subscribing. And last but not least, if you have any questions for me surrounding any projects that I discuss here on this channel, including MELD, then make sure to go ahead and leave a comment down below. Now, as we get ready to kick things off, if it's your first time hearing about MELD, they're going to be a non-custodial lending and borrowing protocol. So what they're aiming to do is simplify lending and borrowing. And keep in mind that you don't necessarily have to use both sides of the MELD equation. So if you've got liquidity that you just want to provide to the protocol, you'll be able to earn a yield. And if you want to borrow against your assets by utilizing them as collateral, you can also utilize the MELD protocol. Now, one key feature of the MELD platform is going to be their bridge between crypto and fiat. So by default, and very similar to other platforms like Aave within the EVM space, as well as LQ or even LendFi in the Cardano space, they'll be providing crypto to crypto loans. But then they'll also be aiming to do something new, which is to provide crypto to fiat. So you'll be able to utilize your crypto as collateral in order to borrow against it in order to get cash or fiat that you can utilize in the real world. If you guys want to find out more about MELD, you can head over to their official website, which is available at meld.com. If you guys want more information surrounding their Neobank, which I'm going to jump into some updates surrounding that here, you can also head over to meld.fi. So from here, you've got two separate tabs. First, they've got the fiat tab breaking down all the types of currencies that will be supported and some of the fees associated with it. Now, if you jump over to crypto, they break down the entire crypto to crypto structure and exactly how, again, you can utilize your current crypto in order to borrow against that. So that said, now that we've got the introduction out of the way, let's jump into some of the highlights following the recent X space. So the first thing I want to jump into is going to be the Neobank. If you guys are not aware, back in the month of August, we had some news coming from the MELD team that their partner that was supposed to be helping them to get their banking license had actually pulled out of their contract. So that did set the MELD team back. However, they've continued to reach out to other companies or entities in order to get this license done. That said, they now have, I believe, some contracts in place, which again was discussed during that X space. Now, due to the fact that they spoke prematurely before, Ken Oling, their CEO and founder, did not provide any specific dates, but hopefully towards the end of this year or potentially in Q1, we should be able to get more information surrounding their brand new partners in the application process for the neobanking license, or if you want to call it, the electronic money license. So that said, we are expecting for the launch of their mobile application to also come about in Q1 of 2024. If you guys missed this, they had the MELD Ignition event, which took place about a month ago, where we heard from every member of the team. And they also gave us access, or at least the diamond hand holders of very first cohort access to their mobile application. That is currently being tested right now. And there's a ton of feedback. And there's also been updates that have been made. Unfortunately, I haven't been able to actually get additional access given the fact that I do reside in the United States. Now, crypto to crypto will be available and that will be permissionless. However, crypto to fiat will only be available in certain countries. Again, given the regulatory uncertainty within the United States, the MELD protocol will not initially have support for banking in the US, but they will be available for, I believe, over 100 plus other countries. And I think there's about 160 countries where they are not able to launch just yet until they get more clarity. Now, moving into the next piece, I want to quickly touch on potential partnerships. So MELD initially launched, I believe, on Cardano. We had a testnet back in January. Since then, they've made the announcement that they'll be utilizing their own L1, which is officially launched as well as an Avalanche-based subnet. We also saw the MELD app or the MELD wallet go live. Now, in the actual MELD app or the MELD wallet, as it stands right now, there is the ability to hold Cardano native assets as well as MELD L1 assets or even Ethereum or Avalanche assets as well. Now, that is the early version or the initial version of the MELD app, where you can obviously send and receive assets as well as NFTs. Moving forward, the team will be aiming to add staking, which should be coming up very soon. In terms of partnerships, though, the MELD team is in collaboration, or at least in talks, with USDM or the Mehen team. And I've had a couple of interviews with Matt Plomin, who's going to be the CEO and founder of Mehen, with my most recent one taking place in Dubai, which are posted on the channel. So if you guys want to find out more about what Mehen is building and what they're bringing forward in terms of their stablecoin, please make sure to go ahead and check those out. So it is good to see that MELD is continuing to chat with the Cardano community. Again, they were a little hesitant to put out their lending and borrowing protocol on Cardano just yet, given a few security risks. Obviously, they're still working with IOG on that, but there hasn't been a timeline as to when the actual protocol will be launching live on Cardano. Now, we haven't gotten a specific date as to when it'll be launching on the MELD L1, but given the recent X space, it seems like it could be anytime between Q1 and Q2 of 2024. Now, because MELD will be running their own L1, I do want to highlight the fact that they will need to collaborate with other infrastructure providers. For example, they'll need to get access to off-chain data and bring that on-chain through the use of something like an Oracle. Many people are familiar with platform, for example, like Chainlink, which is arguably one of the biggest oracles right now within the EVM space. Within Cardano, we've got Orcfax as well as C3. And so it'll be interesting to see exactly who MELD partners up with in order to launch or in order to utilize their Oracle and data services. Very similarly, they're going to need DEXs to launch on their own L1. So we could potentially see DEX providers integrating or moving over into the MELD ecosystem. And then, of course, we could also expect that marketplaces, for example, such as an NFT marketplace like we have here in Cardano in JPEG, could potentially be built on the MELD L1. Now, the team continues to work and partner with Chainport. If you guys missed this particular update, a couple of months back, we saw Chainport, arguably one of the biggest bridging providers, especially touching into the Cardano ecosystem, partnering up with MELD. So what this allows for you to do is take your MELD from Cardano, move it over into the MELD L1, or potentially into other EVM networks as they branch out and expand their protocol. Now, they also have a bidirectional bridge as well. So if you want to move your assets from the MELD L1 into other networks, you can do that again. And what's really cool about this is the fact that the bridging itself can actually be done through the MELD wallet. So you don't necessarily have to go to the Chainport bridge. You can actually set up the transaction directly from your wallet. Again, given the fact that the wallet provides support for Cardano native assets, MELD L1 assets, as well as Avalanche and Ethereum assets as well. So a really cool integration there. And again, that's going to wrap it up for some of the partnership news that was discussed as a part of the X space. I will go ahead and leave the link to the actual space down below if you guys want to go ahead and check it out on your own. It's about 30 minutes, but keep in mind that the spaces themselves last about 30 days before they're auto-deleted on the X platform. Now, the next and probably the biggest thing that I want to jump into is going to be MELD staking. So before I go any further, I do want to just quickly highlight that when it comes to MELD staking, they've got a docs site or a docs page where you can jump into all of the stats and just all of the information, right, and facts about staking as a whole. Now, this is pretty thorough. It dives into tokenomics, all of the requirements, and just anything that you might need to know about the MELD protocol in general. So I definitely recommend that you guys check out the docs. They've been working to update these, especially within the last couple of months. And as you guys can see here, this is extremely thorough when it comes to just covering everything that we need to know about staking. Now, that said, we did hear from Ken, and he was able to drop a little bit of alpha that I want to cover here with regards to staking. So because MELD is going to be building their own L1 or their own network as an Avalanche subnet, they're able to tweak the staking parameters to more closely take some of the benefits that we have within Cardano while fixing some of the issues that we've seen with staking on EVM compatible networks. So what they're aiming to do is launch staking by the end of the year of 2023. So hopefully within the next 5 to 6 weeks, we should have some sort of native staking, which will be taking place on the MELD L1 available for MELD token holders. Now, Ken did state that for the very first 6 months, we can expect an 8% yield in terms of staking, which is a pretty lucrative opportunity for locking up your assets and keeping them off of the market. So if you guys are interested in that, I can definitely create some educational content to show you guys how to bridge from Cardano over into the MELD L1 and then from the MELD L1 into an actual MELD node, right? Which again, that's going to be quote unquote like a stake pool operator that we have here in Cardano that is providing the infrastructure or the backbone to the MELD L1 that is then rewarded as blocks are minted on their network. Now, moving forward, what they are going to be aiming to do is actually utilize the profits. I believe it's about 15% of the revenue coming into the protocol to distribute amongst MELD node operators. And then from there, the operators get their own cut or their margin. And then the remaining portions are distributed out to their delegators. Now, one really cool thing here, which I really appreciated, was their approach towards dividing the transaction fees or the gas and the actual block rewards. If we take a look at other EVM networks as they stand right now, for example, like Avalanche or even Ethereum, the gas fees are directly tied to the value of the Ethereum token. So as Ethereum gains in value, so will the actual gas prices rise. Now, this is beneficial for node operators because, again, they're getting a cut of those transaction fees or the transactions that are taking place on the network. However, you could imagine that as the price goes up, that is actually not a good relationship for the users of the network because, again, now they're having to pay a higher gas fee in order to get their transaction executed on the network. So what MELD is doing is dividing up this particular equation, and what they're aiming to do is keep the gas fees extremely low by making sure that even though if the price of the token increases, that the block rewards are not directly tied to the actual gas price. So that said, that's where the 15% of the protocol revenue comes in at. As the protocol generates more TVL, we can expect that that 15% will continue to rise. And not the actual amount, but the amount of revenue coming in from that 15%. And that is what is going to be going back towards the node operators. So utilizing this brand new kind of method when it comes to staking, users in the long term, as MELD continues to grow, can still expect low gas prices. And that is great for them. But then on the other end, for the node operators who benefit typically from higher gas prices, because now there's going to be that disconnect, but they're going to be getting that 15% from the protocol, they're also going to be happy. So there's an incentive on both ends of the equation to actually rise or increase the TVL on the MELD L1 or the MELD protocol in order to benefit the node operators while continuing to still provide low gas fees for everyday users like yourself and I. So that was probably one of the biggest pieces there that I really enjoyed hearing about when it came to the Twitter space. I do also want to highlight something else in just a minute surrounding NFT bonds or NFTs that are given out as a reward for actually staking. Now, before I move over any further, I do want to highlight that there will be two different types of staking available on the MELD protocol. So the first is going to be what they call liquid staking. So let me just quickly share my screen here. And I'm going to blow that up just a little bit. Hopefully you guys can see there. But what they're going to have is going to be liquid staking, which is going to be very similar to what we already have on Cardano, where you can do it at any time. You can remove your assets from staking. And at that point, you obviously stop earning rewards. So that's liquid staking, very similar to what we have already on Cardano. But they're also going to offer what they call locked staking. Now, the locked staking will be just that. You're going to put up your assets into a smart contract, which will be locked for 3 different time periods. The first is going to be a 6-month period, and then there's going to be a 1-year period and a 5-year period. Now, keep in mind that each of the different lock periods will actually provide you a different yield. So the longer that you stake for, generally speaking, the more that you're going to earn. So in this particular instance, the 5-year lock would potentially give you the best return on your investment. However, keep in mind that the rewards will be dynamic. So again, this is what I really like to hear from the team. So for example, if everybody chooses to stake and lock up their assets for 5 years, there could then actually be another type of option of staking that isn't being used that may provide a better deal. So I'm not going to be able to break everything down here, but they do provide some additional examples here. So what we have is going to be 2 separate options for somebody staking 45 million. So when it comes to liquid staking, you could see here that their weighted amount will be 45 million. So no additional yield boost when it comes to staking through liquid in this instance. If they were to stake and lock it up for 6 months, again, the same exact 45 million. In this particular instance, they will earn a little bit more rewards than somebody who's only staking through a liquid manner. Again, that's some of the risk that you take by staking in a locked fashion. But that hopefully should illustrate a little bit of what I'm talking about there when it comes to the upside. Again, we've got another example of 2 separate people staking 5 million MELD here, where one of them is locking it up for 1 year versus somebody locking it up for 5 years. And as you guys can see here, we've got 0.42 million in terms of rewards for the 1 year, and then 0.84 million in terms of rewards for the 5-year stake. So again, 2 separate examples I wanted to quickly highlight there, hopefully illustrating the benefits of the longer lockup period. And then to kind of top it off there, for anybody who might think, okay, well, 5 years is a really long time for me to stake. Well, this is another cool thing. So whenever you're going to be performing log staking, you're going to receive an NFT. That NFT will be a representation of the amount that you have staked, and that essentially acts as a bond. So you could potentially jump on a secondary marketplace and actually sell that bond, which would give the rights to whoever purchases that the stake once that lockup period is over with. So you're not necessarily locked into the staking because you can sell that bond, but the actual MELD tokens will still be locked to where if somebody purchases that bond from you, they'll have to wait the remaining period in order to claim whatever has been staked. Another cool thing here is the team has actually chosen to utilize a 5-day rolling epoch, very similar to Cardano. But then on top of that, just like Cardano staking rewards, you can still claim those rewards every 5 days without actually having to have the underlying stake amount being unlocked. So let's say that I stake for 1 year and every 5 days I want to claim my rewards. I can do that while still having my 1 year amount that I initially put up continuing to be locked. So really interesting updates there. I think the biggest thing for me there was the dynamic rewards and then the NFT bond or the NFT that's given to you once you actually perform a lock staking. So that, I believe, will wrap it up there when it comes to staking. The next thing I want to briefly touch on is going to be the bank manager NFTs. If you guys missed these particular NFTs, they're a series of I believe 45,000 NFTs that were eligible to be minted. I think as it stands right now, there's only about 3,000 on the Cardano network. So if you haven't already minted these, I do have a dedicated tutorial showing you guys how to do that. Now, these will provide you guys a minor discount when it comes to anything that you're borrowing on the protocol, as well as a minor yield boost if you're providing liquidity to the protocol. Now, this team is working with additional artists on potential new styling, and they might be able to allow for us to upgrade our bank managers, which will still have the same utility, but to a new version or a new style on the MELD L1. Now, they're also working on a bridge to move over their Cardano NFTs, which include the MELD Diamond Hand NFT and the bank managers over into the MELD L1, not the Avalanche network. So I want to be clear about that. You'll be able to move your assets, your NFTs, from Cardano directly to the MELD L1, where you can then utilize them or interact directly with the protocol. If you're not familiar with the Diamond Hand NFT, that will give you access to feeless banking, as well as early access to different portions of the MELD protocol as they roll out, with the mobile application being one of those already. So there's 4,600 of those. And again, there's about 3,000 of the the bank managers that are currently minted and available. Now, the very last thing I want to jump into is going to be some updates surrounding the progression of the MELD environment or the subnet. And so we heard from Ken basically saying that right now they've got a total of 15 different nodes running, and 5 of those are actually being run by the MELD team. Now, ideally, we would want to have as many nodes as possible being run by the community. therefore taking any burden away from the MELD team having to run nodes on their own. Obviously, the protocol is still early, but once staking is live, the team's outlook is that more people will now have an incentive to come and actually operate a node, because again, they'll be able to raise delegation from the community while also being rewarded as a node operator for providing the backbone and security for the MELD L1. Now, as the blockchain grows, the team is aiming to bring on a limit of 101 node operators. So whether that takes, a year, maybe 2 years or 3 years, I think is completely dependent on how lucrative the opportunities are to become a node operator, but that's going to be the limit that they're aiming at right now. Now, in order to become a node operator, which they do have directions on their official documentation page, you have to provide 2,000 AVAX, which I think right now is anywhere between $30,000 to $40,000. Obviously, as the price of AVAX grows, that will only become that much more expensive. But keep in mind, this isn't a requirement directly made from the MELD team. That is just the requirement to run any Avalanche node. So because MELD operates as a subnet on Avalanche, you do have to meet that particular requirement. And then on top of that, you've got the ability to provide 100K of the MELD tokens. So you need 2,000 AVAX and then 100,000 of the MELD tokens. Now, if you provide just the bare minimum, the MELD team will be implementing slashing. So for any bad actors or bad nodes, they could potentially not only lose their 100K MELD, but they could potentially lose the MELD of anybody that's delegated to them. In order to mitigate that risk, if you provide the 2,000 AVAX and 2 million MELD as an operator, now the delegators delegating to your pool or to your node will not get anything slashed, but if something were to be slashed, it would be 100% from the node operator. Now, that might sound confusing, but let me explain what is going on here. So with respect to this, what this does is if you put up 200 or 2 million as a node operator, you can now advertise to the community, right? Hey, come delegate to my node. And there's no risk to the end user who's delegating to that node to get slashed, making it a much easier opportunity to gain delegation as opposed to somebody else who has less skin in the game, where a delegator's funds may have the opportunity or the ability to get slashed. So again, this team is really thinking about how to make this entire experience better, but they've been clear to state that their goal is not to come out and slash operators. Again, node operators are going to be the ones providing security to the MELD network. So it's in their best interest to make sure that they don't slash anybody, but in the event that there are bad actors, they do have some of these guardrails in place. Now, I think that will actually bring us towards the end here. In closing, we did hear from the team that everybody right now is heads down focused on launching the lending and borrowing, which again, that is going to be their main core offering. I've already talked about the kind of minor setback on Cardano with them working with IOG, but we haven't had a clear date as to when everything is going to launch on the MELD L1. But Ken, I think, is kind of alluding to Q1 or Q2 of 2024. So that was another key piece there. And then one last thing that he did touch on was what they call latent assets. So traditionally speaking, when you provide liquidity into a liquidity pool, if that liquidity pool isn't actually being used, the return on that is quite low. What they're going to be doing is taking latent assets or pools that are not utilized and actually staking the MELD as well as potentially some of the other tokens within that liquidity pool to the protocol in order to generate more yield. So again, this team has just really kind of thought about so many different mechanisms. What I really was impressed about was the division of the block rewards and the gas fees, the launching of the dynamic staking, as well as the bonds or the NFTs that are rewarded to users when actually staking. So quite a bit for me to discuss there. Again, I do want to just quickly plug in their documentation website. This literally covers everything that you guys need to know. If you guys have any questions about, the delegation process, how MELD works, their tokenomics, their white paper, supported tokens, and how to even get early access to the platform. So please make sure to go ahead and jump into that particular portion of the website in order to find out more. Ladies and gentlemen, that will do it here for today's video. As always, if you learned anything along the way or you just found this video to be helpful, I would appreciate you if you could tap that like button. If it's your first time stopping by Dapp Central and you want more content like this, consider subscribing. And if you have any questions or just comments about MELD or anything else going on in Cardano, make sure to go ahead and leave a comment down below. That said, and as always, I will see you guys in the next video.